friendly real estate guide. Nagaraj Annaiah, the one-stop shop for all real estate needs. Call 408-805-4653 or log on to nagarajhomes.com.
Welcome to the Real Estate Show with your host Nagaraj Annaiah, your trusted Bay Area Realtor, bringing your expert insights, tips, and strategies to navigate the world of real estate. Today, I'm joined by special guests Elder and Tony from the CPA Dude as they dive into one of the most misunderstood topics: why a high salary does not automatically lead to a wealth. Together, we will explore the stark differences between income and a wealth building, discuss the tax implications for high earners and investors, and reveal strategies for maximizing your financial potential in the Bay Area. Hello, Tony and Elder. Welcome to the show.
Hey Nagaraj, how you doing?
Doing really good. Hello, Elder. Welcome to the show.
Thank you for having us. Happy to be here.
Yeah. So if you guys have any questions about the real estate or taxes, we are live and we would love to hear from you. Call us at 877 Bolly 92 to join the conversation. Each and every listener who gives us a call today, we'll be giving out a free tickets to the Real Estate Connect event happening on December 7th, 11 a.m. to 3 p.m. at Sunnyvale in Shubham Halls. Do give us a call if you have any questions on the real estate or taxes. Now let's break down the myths and about money and the wealth and discuss actionable ways to secure your financial future. So, Tony and Elder, so I have a question to you, right? One is like a lot of times we have a misconception in the Bay Area, the most of the tech professionals make a high money. Does it mean that we are going to have a build a huge wealth? What do you think about this?
So generally, people in the W-2 world have a very hard time offsetting their W-2 income. The tax code is really designed for W-2 workers to pay the most amount of tax as possible. It's very hard to get deductions as a W-2 worker. Very easy to do so as a business owner, but much more difficult on the W-2 side. But thankfully, real estate is one of the major vehicles W-2 workers can use to decrease their taxable income.
Wow. Listeners, if you're connecting with what Elder and Tony we are going to talk about, and you're the one of them like paying high taxes but not seeing your wealth growing, you can give us a call. Our studio line numbers are 877-265-5992, 877-265-5992, or 877 Bolly 92. It's the same number, both are the same numbers, but just let me give out again 877-265-5992. Each and every listeners who is going to call us today, they're going to get a free ticket to Bay Area Real Estate Connect happening on December 7th at Sunnyvale in Shubham Halls. If you would like to know how to build your wealth and how to basically save your taxes, this is the time you can give us a call. So one more question is like, I have a couple of kids, Tony, but how do I pay my children and how can I make them as an employee so that I can start building my wealth and I can educate my kids also? Is there any way we can do that?
Oh yeah, definitely. This is one of the best parts that if you have kids, this is the strategy for you. So you need a business. So luckily, you got your real estate business here, selling beautiful homes. And what you can do is you can have your kids start working with you. So they can go out to the showings, the listings. Also, they can make all the social media content for you too, doing type of cleaning. And what you can do is pay them a reasonable salary. Pay them, hey, if you're gonna make a social media video, it costs like $300 to make a lot of those, you can pay them reasonable rates. It has to be market rates, but in today's day and age, everything's expensive. So, for example, make your kid, they make 10 videos for you, you can pay them $3,000. Then what you'll do is, you'll pay them from your business. You'll pay a family office management company from your say you have a corporation, and then that family office company is going to pay the children, and then the child will get a W-2, and then they can put the money into a Roth IRA. And once you put in the Roth IRA, then this is how all that money will grow tax-free. And when they take it out, it's tax-free. So this is real wealth building. If you especially have kids, you want to set your kids up for the future. It's definitely one of the best strategies out there.
So it's basically if somebody is having the businesses, they can use them as like hire for them for some social media or like any other purposes, and they can pay them. And again, on top of them, that whatever they get paid, that they'll be using for the Roth IRA.
Yeah, you'll use for the Roth IRA, and if they pay them less than $14,000, they'll be all tax free. So it'll be a deduction for your business. They'll pick up the income all tax free. Don't have to pay a single dime on taxes, and then set themselves up for the future to let compound interest, the eighth world wonder of the world, work its magic.
Listeners, did you know about this? How to make your children as like own your employee, like, and basically, see, I think it's not about employee itself, Tony. Like, it's basically we are educating the kids from the beginning itself, the way to build their wealth, the value of the money. That is very, very important.
Oh, super important. It's so every dollar when you're in your teens is worth $32 when you're 59 and a half. So every, dollar you put away now for it, you'll just wait until they're 59 and a half, it's gonna be $32. And it gets worse once you get older. 20 years old, in your 20s, it's only worth 8x or
Mhm.
16x, sorry. And then when you're 30s, it's only worth 8x. And then 40s is only 4x. So really want to start the kids young and get them set up for the future here. This is the joke of how trust fund babies are made.
Yeah.
Yeah.
Listeners, if you have any questions, do give us a call. Our studio line numbers are 877-265-5992. Myself, Realtor Nagaraj Annaiah, and I'm talking to Tony and Elder from the CPA Dude. They are the wonderful, basically, I like the way they do the basically tax strategies or a planning. They don't believe in one, just meet at the year end, go plan for your taxes or pay for your taxes. Their strategy is such that they meet 4 times in a year. Correct me if I'm wrong, Tony. 4 times a year, and every time you meet with them, like basically help them to build a strategy. So that way, when you're ready to file for taxes, you have everything ready for you, and that you already built a strategy.
Yeah, we work with you all year round, just to make sure that you're taken care of, you're syncing up, modifying your tax plans, more money, more problems. So, we got to see us more often. That way you don't overpay and tip the government for no reason.
Yeah. So this is a question to Elder now. Elder, like we were talking about the children and employees, like let's talk about we have our own property. Can we use that for a business? How does it going to help us out?
Definitely, yeah. So if you have a partnership, an S corp or a C corp, or if you know somebody with a partnership, S corp and a C corp, you can actually rent your own house to yourself or to another business. You yourself will pick up no taxable income,
Mhm.
and the business will get a full business deduction. This is one of those old loopholes known as the Augusta Rule.
Mhm.
The Augusta Rule is somewhat complex, and it does take steps to implement. So if you want to if you want to know more, definitely reach out on the CPA Dude, book
Mhm.
some time with us, and we'll tell you all about it.
Yeah, I think let me call out on that. If somebody wants to book an appointment with the cpadude.com, go to the cpadude.com, thecpadude.com, and there is a link for setting up an appointment with them. They can't be reached out directly over the phone, but you can directly set up an appointment. The first time is a free consultation with them. It's a free consultation with them. Use their services so that you can plan your tax strategies very well, and it's almost like it's year end. If you're not planned for it and you would like to understand what are the ways you can save your taxes, go to the cpadude.com. Myself, Realtor Nagaraj Annaiah, and I'm live with today Tony and Elder from the CPA Dude, and we are talking about Bay Area real estate and the taxes. If you have any questions and would like to get a free ticket to the Bay Area Real Estate Connect happening on December 7th, happening on the December 7th at Sunnyvale in Shubham Halls, 11 a.m. to 3 p.m. It's a one event where you should not miss out. If you'd like to build your wealth, this is the event you need to be attending it. That's on happening on December 7th. So that was a great thing, like how you can rent out your own property to basically to your own business and even save the taxes. Most of them was not aware about that. Now let's talk about the foreign income. So if you're making an income in the foreign countries, how do we should we pay for the taxes for that?
So America is a very, very unique country. America taxes worldwide income. So you may live in America, and then even though you may have income from other foreign countries, you have to claim that income on your U.S. tax return, and you have to pay tax on it. Having said that, if there is a U.S. tax treaty with that country, the U.S. has treaties with almost every country out there, you will get a foreign tax credit for it. So depending on where that income is sourced from, the foreign tax credit may cover the entire income or it may cover just a portion of it.
Okay. So listeners, you're listening to Real Estate Connect. So if you have any questions on the real estate or the taxes, give us a call. Our studio line numbers are 877-265-5992. If you're planning to buy an investment property and would like to understand how it can leverage or reduce your W-2 income, do give us a call to understand. I think they have a very good thing to talk about it. So our studio line numbers are 877-265-5992. Tony, the question to you is like, for example, if I'm on a W-2 income and I'm planning to buy an investment, I already have one property, first property, and I'm planning to use as buy a second property now. So that second property becomes my primary residence. The first property, how can I leverage or like basically help me to use? Because we know that most of the times the properties what we have in the Bay Area doesn't make sense, right? Because the monthly payments are so high. Uh, how do we leverage to reduce our taxes?
Yeah, so to reduce taxes, there's multiple strategies if you're gonna buy a new home and use your other one. The first one is if you want to possibly, first is like the primary home exclusion. So that's section 121. So this is if you live in the home and own it for 2 of the last 5 years.
Mhm.
And say if you're single, you'll get the first $250,000 tax free. If you're married, though, you get the first $500,000 tax free. So
Okay.
that's the best part if you lived in the home and you want to sell it. However, say if you want to keep it and you can rent it out for a year or two,
Uh-huh.
then you can 1031 exchanges, which simply means that you can trade this property for a different property and not pay any taxes. So this is really how you build wealth and get rich because now you don't have to pay the taxes. You
Mhm.
deferred all the taxes for a long time and you keep on stacking capital this way. So 1031 exchanges are very great if you're going to have, use a second home for you here.
Okay.
Yep.
But see, a lot of listeners might be having a questions like, should I keep or sell? Because if they want to keep their monthly payments, as I said, it's very less for them, right? Like means I mean to say it's more. So you are in the negative of a 2,000 monthly. So in that cases, can we use a depreciation for your investment properties? Does it work out for in that way?
It would not unless it's rented out. So if you did rent it out, you'll get a
Uh-huh.
loss and you have depreciation, which is good. And
Mhm.
then all of this will actually be a passive loss. Passive losses only can offset passive income. But say if you go make an investment into your friend's, restaurant,
Mhm.
and you get income from that restaurant, the losses from your rental property offset that. So this is kind of like how, big investors don't pay taxes because they have passive losses from real estate that offset passive income from businesses and it becomes all tax free for them. So this is really how you can leverage your real estate further.
Got it. Listeners, if you have any questions on the Bay Area real estate or anything on the taxes, you can give us a call. Our studio line numbers are 877-265-5992. Myself, Realtor Nagaraj Annaiah. I'm live with CPA Dude team, Tony and Eldar, and we are discussing all about this, the taxes, and the real estate and real estate. So that's a good thing. Like basically, you're saying is like basically, if I put it as an investment property and when I start renting out, I can use as a depreciation.
Yep, exactly. Once it becomes investment property and you put
Mhm.
out for rent, you can take depreciation on it. And then depending on how much you want to supercharge it, you can also use accelerated depreciation through buying a cost segregation report, which simply allows you to, I would say, light your depreciation on fire. It goes really fast. So you get a big loss that first year you put a property in service, and it creates a big non-cash loss. That's the best thing about depreciation. It's not like you actually lost money in your pocket. Your bank account's fine. You just look very poor on paper, which is great for taxes, so you can reduce your taxes.
Mhm. I think that's depends on what they're planning for, right? Like if, for example, they're not planning to borrow anything in the future, then it's okay for them because they're showing us so much negative losses in their tax returns. So depends on what they're planning for the future. And again, depends on what they want to do it also, because once they show it as an investment property, they can't go back and show as a primary residence later again.
Oh, you can, but you have to move back in. Yeah, so I don't know if anyone likes moving that much.
Yeah,
But
I
yeah, that's yeah.
don't do that one that much, right?
Yeah, no, it's no fun. Yeah, I don't like moving. I don't know about you. Yeah.
Yeah, don't do that way, listeners. Like, so, but if we have any questions, we are still, we have a few more minutes and we are talking to the CPA Dude team. And one of the important thing, right, like transferring uh, property to a family members. What are the tax implications should you consider when transferring a property to a family members?
So when transferring property to family members, generally you want to do like a true arm's length transaction.
Mhm.
You want to sell it to them at fair market value. You don't really want to go too far below that. Otherwise, you may get into gift tax rules. So, for example, if I own $1 million property and the fair market value is $1 million, if I were to gift it to someone, I
Mhm.
may get caught up in gift tax rules and I may have to pay tax on the gift. So just be aware of that it is expected to be a true third party, like arm's length transaction.
Okay. So basically, you need to watch out when they're gifting it. And then it's better to talk to you guys, understand based on scenarios to scenarios.
That's exactly right. So tax is very complex. It's never one size fits all. If you ask any good CPA, the answer is always it depends. So
Mhm.
if you have any complex questions, definitely book time with us at the CPA Dude.
Mhm.
But just to add, one cool thing about real estate is, you accumulate real estate over time. You can put it into a trust when you're older, and then you can pass it on to your kids tax free. We find that real estate is one of the best ways to pass on wealth to your children.
Wow. Listeners, did you know about this? Like the way basically through a trust we can transfer to you the children's without paying a tax. And that was a great thing about it. And one more thing is like, I think in the beginning of the show also, right? Like I talked about, but let's touch upon again. How can a high income professional balance real estate investments and tax planning to maximize the returns? Because there are a couple of scenarios. One is being on a H1B and other one being a citizens or a green cards. For both of them, let's talk about it. Because a lot of H1B folks think having an investment properties can't leverage their taxes. What do you think about that?
Yeah, you can still have investment properties that way. They just have to be passive. They can't be active in nature. So I wouldn't let that limit your purchases. Really where a lot of wealth is built is, you'll be working your day job W-2, making your three, four, $500,000. And while you're sitting at work, that property is going to appreciate each year, especially in the Bay Area, right? Your
Mhm.
home's going to go up 40, 50 grand each year doing nothing. So yeah, don't let that limit your beliefs. I'd say keep on, buying real estate. It's never a bad choice. Obviously, do your numbers, find a good realtor like yourself to find the good properties.
Mhm.
But it's great. And then tax wise, it's the best just because you get the interest on that. You can take more depreciation. It's always like a hidden gem that you're sitting on.
Mhm.
So that's always good. And then another thing too is, for year end right now is the right time to do your taxes. Your tax planning is, right before after 12/31, December 31st, it's not good for your 24 taxes. So if you don't take action now, you're going to overpay in taxes. So if you don't have a CPA and you're making, $400,000, you
Mhm.
should have a conversation. There are actually other strategies that you can do. It's not very public, of course. There's some like more gate kept strategies out there that not the whole public knows. Hence
Mhm.
why the rich always get richer. But talk to us. We have all these strategies that you can do, for your income, making $400,000. There's a lot of opportunity for you.
Yeah, I think that's right. Set up an meet appointment with Tony and Eldar both. It's the best way to do it. It's a free thing. Go to the cpadude.com. Click on the meeting. Basically, on the bottom of the page, there's a meeting invite, like basic calendar. Click on that, and you can set up a meeting with them. It's you can get a free tax strategies, like how you can basically you can try to compare what was your last year taxes you were filing in, and how can the CPA due team can help you out to reduces your taxes. Is that the way to go about it, right, Eldon?
Definitely, yeah. So on the call, we'll learn more about you. We'll learn about your profile. We'll see what tax strategies fit based on your profile. We can discuss those briefly, and if you choose to go with us, and work with us. We'll help you implement all those strategies throughout the year to make sure that you are truly maximizing your tax savings and building your wealth.
Yeah, that's a great thing about it. I think, see, one thing what we discussed about the investment properties, right? Like I've seen people staying in Lathrop. Now they're trying to buy in Manteca, second properties, third properties. So over the same thing happened in a mountain house also. People who moved to a mountain house, they bought all the Tracy. That's how the Tracy prices and mountain house prices went up. And the second thing is Lathrop people now trying to capture more towards the Manteca and Stockton areas.
Oh,
They're all this doing it because of the one thing, the tax strategies what we have for the investment properties. Correct. So this is what we discussed about how the investment properties, buying the investment properties, being in a negative stuffs, how we can depreciate. So we can maximize the depreciation in the first year or next 5 years also, Tony. How does that?
oh yeah. So your depreciation, the whole house, you know, if it's single family home on there, residential real estate, it's
Mhm.
gonna be depreciated over 27 and a half years.
Mhm.
However, you can, you know, accelerate that. You know, you can, you know, do that cost segregation study, and that allows you to break out different components of the home. So your doors, your windows, your floors, and then it'll have a shorter useful life. And that way you can take, you know, bonus depreciation on that. This
Mhm.
year you can take 60% bonus depreciation, and that way you're allowed to, you know, write that off on your taxes too. So the other big thing too is for one thing I don't think we've talked about yet is the real estate professional status.
Mhm.
This is like I like to call this the unicorn of the tax code. And generally, how this works is that you got one high earning W-2, you know, someone in tech, someone the doctor, and then the other spouse stays at home, takes care of kids, takes care of the real estate, you know, portfolio. And
Mhm.
what happens is that real estate professional status, you have to, you know, work 750 hours over 50% of your time, have material participation, but you hop through all those hoops.
Mhm.
And now all those losses you're generating from your real estate offset your spouse's W-2. So, you know, we had one client, they did 1.8 million in active income. The other spouse, they generated $1.2 million in depreciation. So they only paid taxes on $600,000 of their income. So, and this was a $1.2 million non-cash expense, right? He didn't actually have to spend 1.2 million. He only spent what about 20% of that to buy that much real estate. So this was like the amazing part of real estate. So like if you are a power couple, you know, one person anchors it at home, others high W-2, you have to use real estate professional status. Otherwise, you're just not playing the tax game the right way.
Yeah. Listeners, so if you want to reach out to Tony and Elder, what's the best way to connect for both of you?
Yeah, so the website's great, the cpadude.com. So it's just the cpadude.com. And then also all our social media is the CPA Dude. So reach out there. And that way we can get a call booked, schedule with you there. You know, happy to, you know, consult and see, you know, if there's opportunities. We'll cut it to you straight. We don't want to waste anyone's time. We don't want to waste our time. So we'll let you know if we can work with you and save the day, or if not, you know, let you know that the unfortunate news too.
Yeah. And I think you missed to say that you will be part of the Real Estate Connect happening on December 7th, and people can come and ask you directly the questions also on that day.
That's right, Nagaraj. We will be there on December 7th. We look forward to connecting with people in person. So if you're thinking about visiting, definitely come. And if you already bought your ticket, we look forward to meeting you.
Yeah, listeners, as the Elder and Tony said, like we have a Real Estate Connect happening on 11 a.m. to 3 p.m. Top industry experts across, like where they will be providing a valuable knowledge and valuable resources. And if you want to build a wealth, don't miss out on that day. We will Tony Elder will be from there from the CPA Dude. April Held from the mortgage will be there, and Naresh from NT Bay Area will be there. And immigration and visa opportunities. A lot of people are on H1B and would like to understand their alternatives of H1B. Then they will be there. And so if do go to the nagarajhomes.com. On top of the homepage, there's a real estate connect event. Click on that to register for that. And don't miss out. It's on a December 7th, 11 a.m. to 3 p.m. And to reach out the CPA Dude, go to cpadude.com. And to reach out to me, go to nagarajhomes.com. And on top of the homepage, there's a WhatsApp icon, and click on that to connect. And thank you so much for joining in today, both of you.
Thank
Thanks
you
for
for
having us.